Myself, Vaibhav. Dollar index is consolidating closer to 92.5 in today's session after a steep decline observed in the Friday session. I think the momentum has now shifted to the bearish side, and for next couple of days we will be looking for the opportunities to go short in the dollar index. Today, in the beginning of the US trading session, we saw some swift moves in various financial instruments, even in absence of the immediate trigger, such as important economic releases. For the US, the data slate is almost blank if we were to overlook the New York Empire State Manufacturing Index, which acts as a pointer of factory growth in New York State of the United States. It has declined to 18.3 in the month of August from 43 in the month of July, that is the last month, and it is indicative of slowdown in factory activity. Earlier in the day, we had GDP growth numbers for Japan, followed by some key economic data points from China. Let us take a look on the economic clues coming in from the Asia. As per GDP growth's preliminary estimate for the second quarter of 2021 for Japan, the Japan seems to have escaped from the clutches of the recession. The Q2 growth is at 0.3% in terms of quarter on quarter and 1.3% in annualized terms, helped by the rise of capital expenditure as well as private consumption in the Japanese economy. The China's economy is continuing to do well. All the three data points released today are pointing to strong growth, albeit at some moderation in pace of improvement compared to the prior month. For the month of July, the industrial production is up 6.4%, the retail sales are up 8.5%. However, the unemployment rate is seeing some rise. It is not much, slight rise to 5.1% compared to 5.5% earlier. Now let's see what's happening in the technicals. We will consider the outlook for dollar index, and after that we will also consider the USDCAD's formation. Let's start the day with the dollar index technical outlook. This is the daily time frame chart, and in the opening remarks I said a steep decline observed in the Friday session, and you can observe it on the chart. The dollar index declined from the levels close to 93 to 92.5. That's a half a percentage point of decline. In today's session, the range has been fairly narrow so far, and I think we can expect the dollar index to consolidate prior before moving sharply, most probably on the lower side again. We are not really expecting any big move in today's session as we have this price action unfolding closer to this 20 EMA, which is likely to provide some support on the lower side. But as and when it gives way, we can expect the dollar index to decline toward these prior swing lows, the levels of around 92 and even below that. If you consider the formation, it is increasingly looking like the double top formation. We have seen the dollar index consolidate for almost 2 months in this narrow range of 100 points in between the 93 on the higher side and 92 on the lower side, and it is still holding well. Even right now, I am not really counting on a fresh breakout on the either side, but we can exploit the situation and continue to trade in this range. And given the fact that momentum has now shifted to the bearish side, we can expect the dollar index to decline at least toward this immediate support, if not much. And moving to the lower time frame charting, we have this regression curve which is pointing northward as we had the formation of higher highs, but the low was not exactly high. However, now that we have this steep decline here, quite sharp, I'm expecting the dollar index to uh, impact these regression curves inclination, and as the price action has entered into the lower band, we can expect flattening of the regression curve. On the lower side, we do have the support in place around this central pivot point of this month's pivot point series, and I think That is one of the factor which has helped stall the dollar index decline, and we have seen the dollar index consolidate well above this central pivot point, and maybe today's session and more better part of tomorrow's session might be spent in consolidation. But as and when we will have a fresh breakout, we can expect the dollar index to decline toward these prior swing low, these lows around 92. Below that, I think the price range works out closer to 91.8 if we were to look at it closely. So we have this possibility of dollar index continuing to move lower, and we can count on the formation of lower highs and lower lows in short term. We can utilize this formation, and if we were to draw a channel, we will get the resistance zone somewhere closer to 92.7, and we have these two SMAs also around the same levels. We have this 50 SMA, which is at around 92.7, and if the dollar index continues to consolidate with a bearish bias, we can expect the SMAs to converge closer to these 200 SMA, and we can expect these two SMAs to then act as the major resistance on the higher side. If we were to target the entry anywhere in the price band of 92.7 to 92.8. I think a stop loss little above this immediate swing high. The stop loss in the price band of 93 to 93.10 should be good enough. And on the lower side, as I said earlier, we can target the move towards 92 or even below that. So that is going to get us the risk reward ratio of 1 is to 2. Now let's see how the things are unfolding for the USD CAD. Though we are seeing the weakness in USD in most of the major currency crosses, USD CAD is an exception. We are seeing that the CAD has actually weakened in today's session, and one of the contributing factor might be the weakness in the light crude oil. Canada, as all of us are aware, is a major oil producer, and that is seem to be having some impact on the CAD's valuation. CAD is now in retreat, and USDCAD has climbed all the way closer to these consolidation highs, and it looks likely after this decline and consolidation closer to 38.2% Fibonacci retracement level of its prior rally, the USDCAD might be looking to regain the momentum on the higher side, and it can climb up towards this prior swing high, which at the moment looks like a tough ask, but in the market you never know. And for us, the intraday perspective has now turned bullish, so we will be looking for the trading opportunities to go long in the USD CAD. For that, we can take help of this central pivot point. I think as long as we have the price formation above this central pivot point, we can be quite confident in our approach of going long in the USD-CAD. So all you need to do is keep the entry point as close as possible to the central pivot point. And on the higher side, we can target the move beyond this immediate hurdle, the immediate resistance around prior swing high of 1.26. If we consider the regression curve has inclined on the lower side, as we have seen extended consolidation in a sideways manner with a slight bias on the bearish side. But now that we have this price formation showing upward momentum, we can expect this regression curve to flatten. But a lot depends on how the day unfolds, how the closing levels impact the moves moving forward. So for that, we will need a sustained move beyond this prior swing high, and then we will have a clear cut formation of higher highs and higher lows, and we will have more reasons to believe in the continuation of the positive momentum in the USD CAD. So for any new entry, we can target the convergence of these three SMAs. The 50, 100, and 200 SMAs are converging closer to 1.253, and this is the price zone which I am expecting to act as a strong support for the USD CAD in near term. Right now, the USDCAD is not exactly close. We are almost 30 to 40 pips away from this desired area. And by desired area, I mean we have to optimize the entry point so as to make sure that the stop loss is not much wide. In case we happen to be wrong, we shouldn't be losing too much money. And looking at the current price formation, I think the stop loss will need to be kept below these immediate swing low of 1.250. So as to make sure that our risk is also limited, we will have to wait it out and see if we can get the entry closer to this support area, and on the higher side then we can expect the move towards 1.26 or even beyond that, bringing us the risk reward ratio of 1 is to 2. So that's my take looking at the current price formation of the USD CAD. Before I sign off, I would also like to remind of the risk associated with trading in a financial instrument, and one should be careful while using the information provided. For further coverage of the market developments, you can also check out the Decoscope Analytics page, the links for which have been provided. For starting to trade, you can use the JForex platform. We are also available on the Facebook. You can follow our Facebook page. Thank you all for joining in. Have a fabulous day ahead. See you next time. Till then, goodbye.